Nearly 100 million credit cards are in circulation in India as of now, which, by the way, is a 12% year on year rise. And of course, this rise has a lot to do with the benefits that you get. Super tempting cashback deals and reward points that you can collect and redeem to get anything from flight tickets to staycations at luxury resorts. It sure is one way to live the 5-star life. And when you think about it, credit cards are quite intriguing. The way that banks use so many tactics to make you spend more, like by hanging the credit card rewards carrot, or of course, the good old cashback deals. The idea is to get people to spend more than they can afford in a month so they have no option left but to take a loan from the bank. And that is how these banks make money out of these pieces of plastic. If you use a credit card, you'll know that cashbacks and reward points work quite differently. Cashbacks are pretty straightforward, whereas reward points are designed in a way that requires special skills to unlock. Basically, availing reward points requires a lot more effort compared to cashbacks. Now, as it turns out, between the two, there is one that banks actually do not like, and it's not the one that you're thinking. Welcome to Daybreak, a business podcast from the Ken. I'm your host Snigdha Sharma, and I don't chase the news cycle. Instead, every day of the week, my colleague Rahel Philippos and I will come to you with one business story that is worth understanding and worth your time. Today is Monday, the 27th of May. Before we get into which one is the bank's favorite, let us try and understand the basics about these two things: cashbacks and reward points. Cashback credit cards are pretty simple. They essentially give you back a certain fixed percentage of the amount that you spend every time you swipe the card. For example, the HDFC Bank Business Platinum Credit Card gives you 0.5% cashback on all retail spending on a minimum statement balance of 10,000 rupees. The Citibank credit card, meanwhile, gives 5% cashback on movie tickets, telephone and utility bills, and 0.5% for all other transactions. Now, obviously, most of these banks have a minimum transaction amount that you have to spend to get back these cashback benefits. And they also have a cap on the cash that they return to the customer. Usually, most banks balance the cashbacks that you accumulate against your monthly credit card bill. Some require you to collect a minimum amount while the others don't. So, with cashback credit cards, it is guaranteed that you will earn a certain percentage of the amount that you spend when you swipe the card. Also, cashback offers are tax free and it is a low effort savings tool, which is why they're one of the biggest reasons why credit cards are on the rise in India. Reward points are slightly more complex. The general idea of how it works is you get one reward point for every X amount of money that you spend with your credit card. For example, the ICICI Platinum Chip credit card gives you 2 reward points for every 100 rupees that you spend on retail shopping. Fuel is an exception. Each point earned is valued anything between 25 paise to 1 rupees. It depends on which bank and what card. So, you spend and collect these reward points and then you can redeem them for different types of products and services, not cash. Plus, they have an expiry date. And among all the reward points offered by different banks, American Express or Amex is known for some of the most rewarding credit cards. For example, right now, it is running a limited period offer that allows its cardholders to turn Amex membership points into Marriott Bonvoy points, which is the luxury hotel chain's loyalty program, for a 30% bonus. This basically means that 100,000 Amex membership points can be converted into 130,000 Marriott Bonvoy points, and they can be used on anything from hotel rooms and car rentals to concerts and golfing. My colleague, the Ken reporter Gaurav Narona, who covers fintech, spoke to Ankush Setia, the co-founder of credit card recommendation platform called Multiply. Setia told him that he knows people who've managed to accumulate about 6 lakh points through the scheme. But it is not as easy as it appears. One bank executive told Gaurav that making the most out of the luxury benefits from your credit card is a matter of skill. Just about 5% of cardholders are able to crack it. Imagine all the planning and coordinating that you have to do to make the most of these limited period offers. You have to make sure that you use your points before expiry. And last but not the least, you also have to plan your leaves and travel based on these programs. And this is just the tip of the iceberg in terms of what you have to do if you actually want to max out your credit card benefits. And it is very consciously designed that way by the banks. They do not want to make luxury so easily accessible. Now, you might think all of this access to fancy resorts and flights and whatnot means that the banks spend a lot more on offering these kind of reward points to their premium credit card holders, right? I mean, if you compare it to entry level cashback credit cards. Turns out, it is actually the opposite. It is the cashback credit card that is the most expensive for banks. Stay tuned to find out why. Gaurav gave a great example of this in an edition of our newsletter Kaching. He pointed to how most of us who use UPI apps like PhonePe, Google Pay, etc. have a whole bunch of unscratched reward points just lying there unused. I know I have a bunch of them on GPay and most of them just expire. Just to give you an example, I went to the rewards section on GPay and the first card I scratched was this brand called Aqualogica offering me a free sunscreen and 100 rupees cashback if I buy its products worth at least 849 rupees. Now, I have no use of it because I already have a particular brand of sunscreen that I use and I don't want to spend 849 rupees to get 100 rupees back on a skincare brand that I have never used. So, this reward is just going to lie there on my app till it expires. It is the same thing that happens to many benefits that credit cards offer you. And this is called breakage, and there is a lot of it happening with premium credit cards. On the other hand, cashback credit cards, like I explained earlier, are quite straightforward and easy to understand for customers. Usually, the cashback amount gets automatically redeemed in your credit card bill at a fixed reward rate. Plus, you don't need to keep track of expiry dates or transfer points to maximize their value. But banks do not like cashbacks. The bank executive who spoke to the Ken told us, and I'm quoting, cashbacks immediately hit the profit and loss account of the bank, whereas reward points have a deferred impact. End quote. Also, let us not forget that banks get commissions for flights and hotel bookings made through their rewards program. Because for airlines and resorts or hotels, this means they are filling out seats or rooms that would have otherwise gone vacant. Plus, banks also charge you higher joining and annual fee for premium credit cards with top rewards. But the cost of cashbacks is more immediate and much bigger. And this, dear listener, is why your bank would rather give you reward points than cashbacks. That's all for today. Thank you for tuning in and catch you on Monday.
Daybreak is produced from the newsroom of the Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. To subscribe, head to theken.com and click on the red subscribe button on top of the Ken website. Today's episode was hosted by Snigdha Sharma and edited by Rajiv CN.